It's time to talk taxes.
New friends, new opportunities, new partners. E.G. Tax.
It's Ask the Tax Lady with Esther Gulius and E.G. Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we got the tax scoop. And in case you've been inundated by it's bad, it's good, it's good, it's bad, it's bad, it's good, what they're proposing, we know, and we will talk to you. And again, if you have any questions, 803-0930, 803-0930, star 930. And I'm joined in studio with my two compadres, Tiffany Fabian.
Hey there, Esther. How goes it?
It's good. And Mr. Fabian, Christopher.
Hello, Esther.
Hello, Christopher. Okay, so we have done, with the limited amount of information we've been given, we are putting together, I believe, in a way that you'll understand it. And if you don't understand, you can call in. If you do understand, you can call in. If you think that it's good, if you think it's bad, whatever the president is proposing, we have it all. We're going to put the numbers to it. So then, and we're in New York, so here we go. 803-0930, 803-0930, star 930 is cell phone. And, of course, we want to talk about our tax school before anything, right, Chris?
Yep, we do. Our tax class starts about between October 13th and 14th, depending on what class you sign up for. It meets twice a week, either in the mornings or in the evenings. It's free of charge. You do, however, have to purchase the book and the workbook. It comes to about $100. We do have scholarships available. If you're not able to pay that, we have like 2 or 3 left. There's also an online class, and the reason that we do the class is that we want you to be our employee, our staff member, and to come join our family.
That's right. That's right. And it's a great class. It's all adults in an adult setting. If you don't understand computers, sometimes that's better because we don't want you to go rewriting our program. I don't think they can, but it's a really great program. All right, so this week we have been waiting, haven't we, you guys? We've been waiting and
anxiously waiting.
Yeah, we were wondering what they were going to come up with, and so they did.
You told me if a Republican comes into office that they will propose tax changes. You told me this.
And here's the thing. That they propose tax changes, that's great. But to say it's a big tax cut, I'll tell you who's going to benefit. If you're a single taxpayer or you're a married filing joint taxpayer without children. And I'll explain why. Because the way our present system is developed, you get a standard deduction and a personal exemption. So the standard deduction, married filing a joint return, is $12,600. It means they're not going to tax that money. And they're also not going to tax the first $4,050 for each personal exemption. If you're filing a joint return, it's $8,100. So in a married filing joint system, it means that you write off $20,700 and plus whatever they're going to phase in this year from an increase. All right? So the Congress the president is proposing a $24,000 standard deduction, and they're touting it as a double increase of standard deduction, but we already had almost $21,000 in place, so they're really only increase, and they're getting rid of the personal exemptions. Okay, and that's great if you have no kids, but each of your kids is worth $40,000-$50,000. All right, as far as write-offs. So if you had 3 kids, it's another $13,000 you would have been able to write off that you can't write off now, right? And if you're a single taxpayer, your standard deduction is $6,300 plus $40,050. So right now it's like $10,350, and they're giving you a standard deduction of $12,000. So the bottom line is, if you don't itemize, you have no children, and you're married filing a joint return, you're going to save about $330. And actually it's not even that much because they raised the lower bracket from 10 to 12%. So even part of that, 2% of that amount you're supposed to be saving, which would be another $60. So I guess it's about $280 if you have no kids don't own any house, can't itemize. And if you're single taxpayer, it's about $120. That is the big tax savings that they're touting.
So you want to encourage people to not have a family? I mean,
No, I mean, but here's the thing. And who needs the write-off more than people with
That's
kids?
right. That's right.
So, okay, so that's one group that's going to save money. Successful corporations, their tax rate is going to drop from 39 down to 20%. So how much of a decrease is that?
That's
Almost
like
20%?
almost
19.
19%.
So if you had a corporation making $3 million, and you're so you're going to save $6 million in taxes. No, 600,000. 600,000 in taxes. If you're an S corp, you're going to save about 14%. So if you had $1 million net profit on your S corp, you're going to save 140,000. Now that's serious money, right? Mm-hmm. All right, not $100, not $200.
What about
All right.
the backbone?
Wealthy estates? The estate tax is gone. They're going to save money. And offshore businesses, which is good because you want them to repatriate and bring the money back into the country. All right? Who will not benefit? People with children. And you guys know you have children, right?
That's just
and,
great.
The only way they can make this equitable, I mean, as far as making it just flat, they'd have to double the child tax credit. And they're talking about doing something with it, but unless they go from $1,000 to $2,000, it's not going to be equitable. Property owners, you're in New York State. We pay lots of property taxes. They're taking that away. New York State taxpayers, we're in one of the highest tax states in the United States. That's gone. Okay. People that have large medical bills. Maybe you have a spouse in a nursing home. That's gone. Large families who have children that are dependent, 40, 50 per child is gone. And if you gamble, you got the income on line 21, where do you take it if you can't itemize as an
Right.
expense?
You don't get to take
Right?
it.
Yep.
So you won $10,000 at the casino. You can't take it as a deduction anymore. The $10,000 ends up to be income. Outside salespeople or people that use their car in their job, it wouldn't be deductible anymore.
But corporations save money.
Right, that's true. But the only loophole that an average person has, and I listened to all the pundits who are saying, the Schedule A is just for the wealthy. I got news for you. The Schedule A is for normal people.
Yep.
You know, the business owners, they got a Schedule C, they got a 210, they got an 1120S, they got an 1120, but regular people use the Schedule A.
That's
And
right.
that's what
The
they're
average
eliminating.
American.
And they're not eliminating the 70,000 regulations. They're just eliminating the Schedule A, and that's it.
Yep. You know, one of Tim, who works with us, he brought up a 1912 tax return, the first tax return ever. The instructions were 1 page back then. Could you imagine if we had a 1-page instruction for tax code right now?
That's true. But speaking of 1 page, and then the other thing that they're talking about is a postcard. Right now, if you are a simple taxpayer with income under $100,000, no itemized deductions, it's a 1040 EZ. We do those for free.
Yep.
And that's
So,
essentially a postcard.
And that's one of the things about tax school that's so great. Even if you came to tax school just to learn your own taxes, so you won't be tricked. That would be really important. So anyway, I just thought you should know, and I got some specific stuff. We're going to take a short break. We're going to be back on the other side with your questions and comments. 8030930, 8030930, star 930 on a cell phone. I'll talk to you in a minute.
And you're gone too far, 'cause you know it don't matter anyway. You can rely on the old man's money.
Hey, you may be able to think you can rely on the old man's money, but you have to make your own. And our job here at EG Tax is to make sure that you hear the truth, right? Whatever comes down the pike, we will tell you how it all pans out. But right now, if you're based upon what they're proposing, the big tax cut, if you're a single person without any children, it'd be about $150, and if you're a married couple without children, it'd be about $280, and that doesn't consider the state of New York because The New York follows the federal, so if you had the ability to itemize on the federal, they won't let you itemize on the state, and so that means that you could lose that deduction. They also haven't dealt with seniors. You know, the seniors get a little larger standard deduction, which even minimizes this $24,000 more, because the senior couple would get $3,000, which means that all they're doing, eliminating the itemized deduction, would be to give them $1,000 deduction, which equates to about $80 after the whole thing flushes out. So it's remarkable to watch the people tell. It feels like lies. I don't know what else to. I mean, my husband and I'm sitting here screaming at the TV like they can hear me, because it's so frustrating. I would love to be with these people and talk about taxes the way they are, not the way they pretend they are.
Yep.
Do you guys agree?
Definitely.
I think it's so difficult. I think even if you sat down, Esther, and talked to them for 2 hours, they wouldn't. It's just really difficult.
I don't think that they know tax.
Right,
I don't
that's
think they
what I'm
understand
saying.
the mechanics
Right.
of the thing. And maybe they're not lying, they just don't understand.
Mm-hmm.
Unbelievable. Okay, let's go on the phones and we'll talk to Art. Hey, Art, how can we help you, sir?
I received a letter from New York State Department of Taxation and Finance,
Yep.
and it says I received this notice because we adjusted or disallowed the pension and annuity income subtraction you claimed on your return, and it was from 2014.
How old are you, Art? How old were you in 2014?
Well, I'm 71 now.
All right.
Okay, now, does that mean, because they list maybe the possible reasons why it happened,
Okay, but all right, so right now you're 71.
but my wife also has to be 59 and a half?
No.
If she took money out of a pension, yes.
Who was it that took the withdrawal, you or she?
Me.
All right. And how old were you when you took the withdrawal?
68?
I'm sorry?
68 when you took the withdrawal, right?
Right?
Yes,
All right. So what you need to do is you need to say you don't agree, and I think you can do it over the phone pretty successfully. Wouldn't you think, you guys?
They may want a copy of his
Yeah,
license
but, I
or
mean,
something, but
You
yes.
should call them and say, I was over the age of 59 and a half, and they may say, we need you to fax over proof of your age, and then that letter you don't have to pay.
And you only took $20,000 off on the tax return, correct?
I have no idea what I did. I went to a national firm to do my taxes.
So tell me, Art, how much do you think you took out that year?
I don't know. I didn't look it up.
All right. Well, only the first $20,000 is tax-free.
Well, wouldn't that firm's computer have adjusted it properly?
Well, my assumption is that the state is questioning your age. You got to prove your age, and that should take care of everything. You should go back to the firm that prepared your return. They should help you at no charge. If they won't help you, you can come on over to us, and we'll take care of it for you.
I already have an appointment on Friday morning to come because I think I need some help, larger help.
We'll help you with larger things, too.
I'm sorry?
We'll help you with larger things, too. Oh, you mean you're talking about the firm that you're dealing with. That's great. And if you don't get satisfaction, give us a jingle.
Yeah, but I will be in your office on Friday
Okay.
anyway
Oh, we will take
perfect.
really good care of you.
for a free consultation.
Yep.
I'm thinking of moving anyway, and this might have put the nail in it.
New York will do that to you.
That's true. We will take good care of you. Make sure you bring a copy of the return and the letter, okay, Art?
I will bring you up 24, because that means if 14 was wrong, that means 15 and 16.
No, I don't think 14 is wrong. I think it is. I think
Just
it's the state.
just bring it. Let us take a look, and we'll check all 3 years.
Okay, you think that was the reason, the age thing?
Yep, absolutely.
I think everything was fine, and New York
Yep.
is not fine.
So don't worry. We'll take a look at it for you, okay?
Employee, so I'm sure that part's okay.
Right.
Okay.
Okay,
you, sir.
we'll see you Friday.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, and we're going to go to Robert in Tonawanda. Hi, Rob.
Hello. My question is there currently government stimulus checks or star rebate checks being mailed to homeowners?
It all depends.
Workers received them for around $600, and I didn't get one. Do you have any information on this?
When did you buy your house?
2001.
Okay, and you're enrolled in the STAR program?
Yes.
Okay. Your STAR check is actually not a check, it's a reduction in your school taxes. Okay, so
On your school bill.
on your school bill. So you get that normal reduction. The people who are getting checks now are for people who just bought a house 2015 going forward. Okay, or people who just signed up for the STAR program.
And so that's why you didn't get a check. You'll see yours in the reduction. The other ones have to pay the entire amount, and they'll get a check afterwards.
Understood. Okay.
Okay? Thanks, Robert. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, and we got Larry. Larry from Georgia. We haven't talked to you, my friend. How you been? Larry, are you there?
I'm so excited I can barely speak. I'm doing. Especially hearing your wonderful voice.
Ah, you're so sweet. What can we do for you, sir?
Well, for first couple things. One, I heard Chris say about when the tax code was just one page. It kind of made me think if that was true now, you would have millions of lobbyists out of work. Right.
We may own an ice cream shop instead of a tax shop.
That's right.
It'd be terrible. My God, those poor people. Having said that, I spoke to my CPS the other day, and I need to mail Chris and Tiffany, I guess, by dividends, count it so we can make sure I don't overpay my estimated taxes and kind of plan for that. So I just want to give you a heads up. I'm going to do that today.
Yep.
And Chris, Tiffany, and Esther, is there anything else I need to do at this point that you could think of?
Well, actually, for somebody with a more all right, so you have to understand the whole thing that they're proposing a change on, which may be retroactive, would be for people that would itemize, and I believe, Larry, you do itemize, so that you would want Tiff and Chris to take a look at that.
Yeah,
And secondly, the expenses that you would have paid to your stockbroker that would have been deductible will not be deductible any further, so you need to take a look at that because it may increase your tax liability. But I will tell you, in most situations, you're not going to find that there's going to be a big change in your tax return because the only thing they really pinpointed was the Schedule A itemized deductions.
I'm thinking, Larry, you should do like you did last year, and we should do a conference call with your financial broker and you just to see where you are and to make sure you're on course,
Tiffany, darling, you can read my mind. You guys are...
That's good.
Let me ask you, Tiffany, quickly, last question, Tiffany. When do you think we should do that? Kind of December, January, February?
Oh, now, sooner than later, right?
Before you make your last payment for 2017. So soon, Larry, the next few weeks.
As soon as she can get you the figures.
Yep.
Okay. Sounds good. I'll work on that. Y'all, bless your hearts. Y'all take care. I'll speak to y'all soon.
Thanks, Larry.
All right, thanks, Larry.
Bye.
All right, let's see. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. Chris, you were saying?
I was going to say something exciting for us, too, is coming out soon is our new app, the EG Tax app for your smartphone, whether it's Android or your iPhone. You're going to be able to schedule appointments, ask tax questions right on your phone. We'll be able a mileage tracker.
In there.
Yep. We're also going to be able to send notifications saying Congress just passed tax law changes. Mm-hmm. See how it impacts you. So we're going to be able to give the information instantaneously, which is incredible for you guys, the listeners.
And all these things, your receipts you can load in, and it'll keep track of all your receipts for deductibility.
Yep.
Right?
Definitely.
All right, let's go quickly back to the phones. We'll talk to Johnson on line 4. How can we help you?
It's John.
Oh, I'm sorry. John.
Yes.
You are John, and you are a son. I'm only kidding.
What deductions are going to be disallowed?
Okay, so this makes it real easy. They're only allowing 2, mortgage interest and charities. The rest of them are gone by the board. And remember, this is a framework, and I read an article this morning from the Wall Street Journal that said that they don't think this is going to come to fruition, but You know, it's really important for everybody to understand what they're proposing, because if nobody says anything, they may just ram it through.
Yeah, because, I think in Congress they all worry about their jobs, and so they want to make sure that the voters know that they're doing stuff, and so they all pay attention to this, and they worry about themselves.
And they're all on the same page with this big tax cut thing. I don't know. I mean, look if your corporation makes $1 million, you save $140,000. To me, that's a big tax cut.
Let me ask you this: like all my product expenses, my show expenses, all those deductions are going to be gone.
All right. So let me ask you this: are you an employee or are you self-employed?
Self-employed.
That's different. They're not touching Schedule C. They're touching 2106s. So if you're a W-2'd employee, maybe outside salesperson who travels from point to point to point, or you have an office and home, or you had to go to school for your job, those are going to be gone.
Okay, so all my deductions
You'll be fine.
can claim being self-employed are going to still be deductible?
You would be fine. Correct.
Okay, because I was going to ask you, if that was the case, should I incorporate then to...
Well, I want to tell you there'll be a lot of people doing a little dance if this passes, because it's not beneficial to many people. So the ones that can do it will do it, but in your case, you'll be fine. But you should, John, you should think about incorporating or doing an LLC for protection anyway.
Right.
Would you guys agree with that?
Yep.
Right, to protect his assets so nobody can go after your own
I don't
personal.
know what you do, but anything you do is litigatable, and you certainly don't want to have that kind of a problem. So an LLC would protect your assets. Okay? I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. We're going to take a short break for the news. We'll be back on the other side. The sun may be shining, but it's chilly. And look I'm Esther Gullius, the tax lady, and we're explaining about what they're proposing. And I hate to say that politicians are. I was following a truck with like porta potties on it yesterday, and they had a sign that says that don't get too close. We are carrying the substance of the political parties. Inside or something, and which would have been poop, So you just gotta, you just really want to know the truth, because the truth will set you free.
Boy, that was a really good mark. It got your attention, didn't it?
It did. I said to my husband, I think that's because they got poop inside. All right, so we got Steve, Jim, and Joe waiting, but I wanted to go over a specific example. All right, now we just are using real examples because I think that's what really people understand. A married filing joint couple with $80,000. They got real estate taxes of 4%, which may be light, right? State withholding off of their W-2s of $5,000, mortgage interest of $5,500, maybe $1,000 in charity. He's an outside salesperson, has some expenses, $4,000, continuing education of $1,000. So his total itemized deductions are $2,050. Under the old law, they would have taken the $2,050 as a deduction plus their personal exemptions, 40/50 times 4, which would have knocked $16,200 off. So their taxable income would have been $43,300, and their tax bill would have been $55.86. Child tax credit of $2,000 brings it down to $35.86. Under the proposed change, nothing's deductible but the standard deduction, no personal exemptions, so their taxable income moves up to $56,000. They're going to pay at a higher rate to begin with, so their tax bill goes to $67.20, less the $2,000 child tax credit brings it to $1,134. So it brings it down to $47.20. So they have an increase in taxes of $1,134. Even if they increase the child tax credit to $200 per child, this family's still going to be off the mark by $834. And on the state of New York, because they don't have personal dependent exemptions, they'd pay an extra $129 in taxes. So this couple would pay about $1,300 more with and I'm using tongue in cheek, the big tax reduction.
And like you said, Esther, rightfully so, the people who need the money the most are the families.
The family,
Yeah.
and I don't care what they say. I would love to sit down with one of these politicians and say, this is not true. Sure, you got a bigger, really all they did was increase the standard, they eliminated the personal exemption. So they really just increased the standard deduction by $3,000 and eliminated everything else, Mary Joint, and $1,500 on the single. So the best anybody can hope for without children would be like $280 on the federal and on the for the married joint couple, and about $120 for a single taxpayer. That's the big tax savings.
And that's if they don't itemize.
That's the big tax savings. Yeah. So I don't know. I hate to call these. I pull out my hair. The next time people see me, they're not going to say what color is my hair. They're going to say, "Oh my God, Esther's bald."
Well, I said to you during the week, I said, "How can we get the word out?" And you said, "Don't worry, the media will do it."
They will. And it's interesting. This morning, I just saw an article on the Wall Street Journal, and I just saw something on the Washington Post. But of course, the corporations are going to save 20%. But the average family, not at all. Okay, let's go back to the phones. And we're going to talk to Steve in West Seneca. Hiya, Steve. How can we help you, sir?
Hi, Esther. Good afternoon. Thanks for taking my call.
My pleasure.
I just wanted to call in to get your advice or your perspective. I realize the tax changes right now are in the proposal stage and not the written in stone stage. But
right.
I just recently got married, and my wife and I did not file the marriage license yet. So we were, and there isn't any jeopardy of that, so don't worry. We were just wondering if there could be any tax benefit for waiting or not. And let me give you a little bit of a profile about us. So my wife, before we both file single without taking any, we both file 0-0.
Yep.
And she is in the top income bracket, and I am in I make 65. So I figure, I think it's 30%, something, 28%. Anyways, so as far as merging all of our assets and then
okay. All right, Steve. First of all,
you know,
if you are legally married, whether you file that or not, if you don't let the IRS know, you're guilty of fraud. And so you kind of like don't want to go there. Okay?
Well, right. So we're not, that's what I mean. We're not actually legally married. There's no.
You are. You got married by a judge or by a pastor?
Sort of.
Okay. Did you pull a marriage license and everything and somebody said, do you, I do?
There's no license like that, any of that.
But you said I do in front of an official.
Yes.
Well, not without you did not get a license?
We did not. That's what
okay, so you did a spiritual marriage.
Yes.
Okay, well, spiritual marriages don't count, Chris, right?
They don't.
It has to be legal or else.
Yeah, I have a client.
Okay, so the question is, being single, is it better than filing a joint return, I think? Is there children involved?
No.
Okay. Probably you're going to be better off staying single.
Okay. Yeah, I realize it was.
Now, but I'm relying on you telling me the truth that you didn't really pull a marriage license and there was nothing really legally done. If there was just a spiritual,
went to the top of a mountain and
right, then you probably don't have a problem.
Has been filed with any.
But I will tell you, let's make sure. Let's look at the two numbers. We'll put it together both ways, and then you guys can make your decision. So why don't you call us at the office? Anytime during the week, 9 to 5, and get those two tax return figures together, and we'll tell you exactly the difference, married joint and two single taxpayers. Probably you're going to be better off from a tax standpoint to be single.
And then there's always the option of married filing separate, but usually your income would have to be equally yoked, and it doesn't sound like it is.
Right. So give us a jingle, and we'll let you know how it all shakes out right now based upon this juncture in the tax law, okay?
Okay, sounds.
Thank you.
Congratulations.
No, it's just
No,
spiritual
congratulations.
things.
But, you know,
Spiritual things
one-
tip don't count.
Congratulating.
One thing, though, too, I know he said taxes. What about health insurance? You know, depending on her company, if they would pick him up free of charge or at a minimal compared to what he's paying now, the tax savings may be minimum compared
That's
to.
true. And when you're doing your taxes, you really do have to consider any more health insurance. That's another thing that nobody's dealing with is that they make it sound like it's so simple. You can file it on a postcard, but the health insurance law is still tied to your
That's
tax
still,
return.
yep.
You know, so it's so dishonest. I'm so disappointed. Okay, let's go back to the phones, and we're going to go to Joe. Hey, Joe, how can we help you?
Hi, thanks for taking my call. Could you give me an idea of just like a quick course on real estate for dummies?
In what way, though, Joe?
Well, I've always heard, you know, it's a great investment, and then you get depreciation versus your expenses against your income. And
Is this your personal home or a rental property?
rental properties, as far as it being as far as it relating to the tax code and being a good investment.
Okay, so when you have rental property that you're renting at a fair market value, that you're renting it to make a profit, you take all of your income and reduce it by all the expenses that it costs you to make the money, okay? Plus you get to depreciate the asset that you bought over 27 and a half years. Unless it's a commercial property, then it's depreciated over 39 years, okay? So if you paid $275,000 for the unit, you would write off $10,000 over and above all your other expenses against your rental income that you had, and usually that would result in a net loss, which you would then be able to reduce your other earned income and other forms of income by that $10,000 loss, as long as it's not over $150,000, because then your losses are suspended.
As long as your income's not over $150,000.
Right.
Yep. And then, so during the time frame, yes, it's a good write-off, but the kicker is when you sell the property. And the people don't talk about that. When you sell the property, all that depreciation that Esther was saying, that $10,000 a year you get to write off, you have to recapture, which means you bring that basis down $10,000 each year. So if you sell that 20 years later, your property is only going to be like $70,000. So if you sell it for $300,000, you're going to have to pay tax on $230,000.
But there's a loophole in the law, which still is going to be in effect as far as we can see, because all those other regs are staying in. You could do an exchange. So you can exchange for another property of greater or equal value, and that gain would go into the new property. Is investment property good? I mean, when you think about it, if you bought a property for $150,000 and the tenants pay it off, and at the end of 30 years it's worth $300,000, you have just made $300,000 off of somebody else's money. So in essence, in theory, it's a great deal. But in the meantime, you have to run it. That's the yin. The yin and the yang. The yin is, you'll do good long term. The yang is that you have to run it, and that is not necessarily fun.
Can you take it write up if you get older and you hire a manager to manage the running part of it because you're older and you have that?
Well, you have to be actively involved in running the property in order to take the loss, which just means that you're approving the leases. So the manager calls and says, hey, Joe, we got this guy. We're going to send you over his application. You think he's good? If you're involved in the management, even if it's in a non-active role, in other words, where you're not hammering and nailing and picking up rents, it's still going to make it deductible.
So what you pay him, is that deductible too?
Yes.
Or what?
All your expenses that are ordinary and necessary.
Okay.
Okay?
I'm a dummy that feels better.
No, you're not a dummy. Call us. We'll be very happy to talk to you.
Thank you very much.
Thank you, Joe. I'm Esther Golias, the tax lady from EG Tax, 8030930. 8030930, star 930 on your cell phone. And we got Steve and Catherine and Eric and Jean holding, and we'll be back on the other side of the break with your questions.
Just like the white-winged dove sings a song, sounds like she's singing.
Ooh, ooh. Hey, it's Esther Golias, the tax lady. Joined in studio with Tiffany Fabian, Christopher Fabian. Hey, and we're debunking whatever you're hearing on the media. And who would think that there would be fake news? There can't be fake news. Do you guys think there's fake news? I mean, anyway, we're talking about the proposed tax law changes. Remember, the operative word is proposed. Let me go, and I know we got Catherine and Judy hanging, but let's say you wanted to go with a moderate thing. Married couple, $50,000, and maybe one of the spouses went into a nursing home and they got medical of $8,000, property taxes of $5,000, charity of $4,000, investment expenses for their stockbroker of $3,000. So they have total itemized deductions of $20,000. Under the current tax law, they'd have a $8,100 personal exemption, so their tax bill would be $2,368. Under the proposed change, they'd only have a $24,000 standard deduction, so their tax bill would increase $752 on the federal, $236 on the state. I would love them to come and talk to me because they're not telling the truth.
Right, and then, New York State's...
They're not telling the truth.
Yeah, New York State still have the nursing home credit. Will they still have,
Who knows what's going to happen? I mean, it's very interesting. Okay, let's go back to the phones. Catherine, my darling, how can we help you, sir, ma'am?
Hi. Thank you for taking my call. I appreciate your time. So I got married about 2 years ago. I'm very fortunate to a lovely man. We were both in the restaurant industry for a very long time, and we both have grown-up jobs now.
Okay, good for you.
Thank you. It's a whole new world, 9 to 5. I have defaulted in my student loans. And it's an incredible guilt that I have, and it's something I really want to start to pay attention to, because now that
you're a grown-up girl.
Because I'm a grown-up girl.
Right.
I have this lovely man that New York State will end up taking his hard-earned tax money because of my default.
Not really. Did you guys file a joint return last year?
We did. And
did they take your federal and state refund last year to pay your liability?
They did.
Okay, so we have good news and bad news. You guys want to tell her the good news?
Yeah, there's something called a non-obligated spouse and an injured spouse. So if when you went into your union, one of the spouses, one of the people getting married, had a debt that they brought into the marriage with them, you can fill out this form when you do your return, and there's a calculation, and the person who doesn't owe the debt will get their portion of the refund sent to them, and you can do that for the federal and the state. And if you didn't do it, you can amend your return and do that on the federal. The state is too late.
Right, but the big
forward,
number probably is on the federal. So Catherine, give us a call. We'll do the injured spouse for you and the amended return, and they'll give you back your husband's portion of the refund.
And also, with that being said, I help with student loans too at the office, and you should go into an income-based payment plan. And they're really agreeable. And sometimes when you have another person you do a conference call, I'm on the other line, they even are more convincing and nice. And when you have knowledge and you do it, there's lots of programs out there for you. So you should start to pay it back at a really reduced rate, but start to pay it back, in my opinion.
So the bottom line, Catherine, is you can get the money back that they seized on the federal. You can't on the state because they require that you file it within how far after you file your return?
10 days after notification your refund was seized.
So the state is out of the question, but the federal, we can get your money back. Okay?
And I do want to pay back this loan. I do.
Of course, but I mean, you want to pay it back. And here's the good thing. You can get the money back on the federal unless you decide that they can keep it. And then Tiffany will help you to streamline your student loans.
Great. So, Tiffany, I have one more question, if you don't mind.
No.
my question is this. After all these years, all of this interest has accrued onto our student loans.
Yep.
Is there any negotiation with that when it comes to student loans?
No, unfortunately. And then another thing that they do too is there's legal fees, and so they lop on the legal fees too. And there's nothing you can do. There is one of my clients. He has a really sad story, and I finally found a lawyer, which I got to make sure before I say this. And he says that you can make your student loans go into a bankruptcy. Paul Caputo has told me that, Esther. I have to find out more details. But
I don't think so. But
yeah,
anyway,
but there's nothing you can do with the interest.
If you were disabled, anyone listening with student loans that are disabled, I have seen them forgive student loans due to a disability. So, but in your case, it sounds like, Catherine, you're kicking and doing good. So, but the thing is, there are, and of course, if you're working for a not-for-profit, if you work for any city, state, municipal, hospital, and any not-for-profit, the first for 10 years making your correct amount of payments, those loans can be forgiven.
And another
too.
thing, if you reconsolidate them, and then we can get them going forward into a lower interest rate, which is a possibility.
But in the meantime, you got money coming back from last year, Catherine.
Well, that's good news, and I can actually just put that money towards it.
Well, but they've already put it towards it.
But when, yeah.
They already have. That's what they seized it for.
I appreciate your time. I will let you go so that you can help out some other people, but I'll definitely be calling the office this week. And
all right, thanks, Catherine.
Wonderful week.
Congratulations.
All right. And let's go to Judy, who's been patiently waiting. Hey, Judy.
Hi, how are you?
Good. What can we do for you?
My husband, I'll start. My mother-in-law had some stock, and she put it in my husband's name, and we've been paying the taxes on all these years. But they sold it recently, and it's about $140,000. What is my tax liability on that? Because this money is going to be split three ways.
Okay. Who wants to tell Judy the bad
Well,
news?
how much did they pay for this stock originally?
Oh, my God, I have no idea. The stock is about 50 years old.
Is she alive?
I'm sorry?
Is your mother alive, the person that gifted the stock?
She passed.
She passed. And it was actually gifted to you prior to the death, correct?
Yes, years ago.
Or did it go through the estate?
No.
Okay. All right, so here's what the law says. If you're gifted something, a capital asset, prior to gifted it, then the basis, what you paid for it as far as the IRS is concerned, is what the donor, your mother-in-law, paid for the stock plus any other reinvested dividends. So if your mother-in-law paid $1,000 for the stock and maybe there was reinvested dividends of $500, your basis would be $1,500. If you sold it for $100,000, then you're going to have a $98,500 capital gain. The good thing is, depending upon your tax bracket, you may pay 0% on that. It all depends on what tax bracket you're in. Up to over 15%, you will pay at 0%.
You're kidding. There's no tax liability.
Well, so you may want to cash some in this year, some in next year, and some the year after.
You sold it already, though, right, Judy? Did you sell it already?
Oh, yeah. He sold it up.
They already sold it.
Oh, okay.
So on New York State, it's going to be completely taxable. On the federal, you're going to have a tax break. Now, unfortunately, because it belongs to 3 children, you're going to end up paying the taxes. So if you call the office, we can tell you what the liability is going to be. Before you distribute that money to your heirs, just take it out of their proceeds.
Well, that's what we were going to do. That's what we were trying to figure out, what the big lump sum was going to be.
Yeah, so call us and we'll work it all out. You may pay very little federal, a lot more on the state, then subtract it from the money that you're going to distribute.
Okay, well, thank you very much.
You're very welcome, my dear. Okay, I'm Esther Golias, the tax lady, with Tiffany Fabian, Christopher Fabian, and I will tell you, when you're sitting and listening to all of the stuff that's going on the TV and you're not really sure what the truth is, you can go to our website at egtax.com. When they talk about filing it on a postcard, the 1040EZ has been in existence for a long, long time. EG Tax does the 1040EZ at no charge. So, I think they're selling something. Certainly to the taxpayers, you want to make sure that you know what you're thinking and how it'll affect your tax return. So if you want to call us during the week, we'd be very happy to work up your tax
I know
situation.
Chris and I were listening to the president's press conference yesterday, and so their big touting thing is that it'll bring more corporations into the country. And
Which
those
is a really good thing.
Yeah.
I mean, I would love to have that money repatriated.
Yeah.
But don't tell me you're going to save the middle-class taxpayer money, because it's not true.
Yep.
It's just not true. Again, and if you're interested in coming to tax school, we have a wonderful tax school that's starting mid-October. We have both online and classes that you can take physically. You can go into class just like you were when you were in college or high school.
Yeah.
And we will teach you on all phases of tax law.
And then also we have a new office this year that's going to be in the Boulevard Mall, which we're really excited about. And
Lewiston.
Yep, very, very excited. Lewiston is a great place and a great community. I've been hanging out there a lot lately because of that.
And then the other thing is we have the tax school, and if you need help because it's the last quarter of the year, and with your return you haven't filed you have an extension and it hasn't been done, October the 15th is the deadline for extensions.
And then also pretty soon it's time for the seniors to sign up for Medicare, and we have Mike and Glenn and their gang. They're going to be using a few of our offices, and they're going to sign up people. So if you need help.
So if you're on Medicare and you don't know where to get your supplemental plans, Mike and Glenn, the financial guys, are going to have somebody right in our corporate office and right at the McKinley Mall who can help you to sort out what's the best plan that you can get. And, of course, we don't make any money off of this. This is just a public service that EG Tax offers, as well as if you're somebody that's wondering about health insurance, right? We have two navigators, Tim and Karen, that'll help you to pick your health insurance as well. Okay? Until next week, I'm Esther Gullius, the Tax Lady, with Tiffany Fabian, Christopher Fabian. We're only just a stroke away on your computer. EGTax.com. Want to help you. Have a great week and try to stay warm. Bye-bye.
WBEN Buffalo, WKSE HD3 Niagara Falls.
The WBEN app for your smartphone is all new. Update to the latest version or download it free and swipe for the latest feed from WBEN.
News Radio 930 WBEN.